Hey everyone, how's it going? Scott Chris here. Welcome to the Mortgage Market Advisor, your residential mortgage market and news. Today is Tuesday the 26th. Let's get started and see what's going on with the market. So bonds actually open about where we closed yesterday, and we've had a pretty wide trading range today. As you can see, the overall trading range has been pretty much an upward trading channel, but we can see that we're starting to kind of lose some of that momentum and trade flat lately. Our trading is supported by about $101.10, and we have a ceiling coming in at about $101.70 now. We may be actually trading in this pattern and maybe kind of transferring from an upward trading channel to a flat trading channel, which means rates aren't going to improve much, but trade the same for a while. Today, the Case-Shiller came out neutral on bonds, didn't really have much impact. The FHFA housing came out neutral on bonds. The consumer confidence came out better than expected, which actually hurt bonds a little bit, which is why we saw a pretty wide trading channel today. Germany's in trouble, so let's keep an eye out for Germany. We're probably going to hear this more on the news. Their 5-year treasury came in at an all-time low. And as we start to see stock and oil start to tumble, we're starting to see more investors put their money into government debt and even maybe considering mortgage-backed securities. So Fed is thought to only increase the short-term rate now only once or twice in 2016 now, where we thought it was going to be much more. So that's good news for home equity line of credits, as well as even mortgage-backed securities, 30-year fixed. So as far as quantifying, since early January, and I've been saying this for a while since we're trading flat, if you were getting a loan in early January and you're going to pay 1.5 points to get a specific interest rate, with the market changing and getting better, now since we're trading about $1.50 better, you wouldn't have to pay any points. So there's a good example of what the bonds are doing. We're probably going to use that as an example for a while as we trade flat. Here's what the analysts are saying. Neil is staying long on short term, meaning that he thinks it's going to get better. Bonds are going to continue to improve on a short term basis, but he thinks the long term bonds are going to kind of flatten out and kind of stay the same. Interest rates, points, fees are going to stay the same. Dan Rawich has definitely a very different view. He thinks that the bonds are going to move to more of a neutral position in the short term, but as time goes on, we're going to break out of that flat trading pattern and actually see bonds improve. So we'll kind of have to wait and see what the analysts say and what actually happens. So thanks to Mortgage Coach for the charts. And you know what? If you'd like more information, feel free to contact me. My information is above. Don't forget to like this video, because every video should be liked, right? Maybe not really, but hey, like this one. And if you have any comments, please leave your comments below. And if it's your first time on the channel and you'd like to get more updates on what's happening with the market, where interest rates are going, if they're getting better, if they're getting worse, hey, why don't you subscribe? Won't do any harm, right? So anyway, guys, take care. Have a great day.